one of the key positives about the Kenyan economy is the fact that the Kenyan economy is very resilient. And the key reason as to why the Kenyan economy is very resilient is the fact that as an economy, we're very diversified. If you look at the sectoral contribution to our GDP, you can see that we don't over-rely in any one sector. As much as agriculture is about 25 to 30%, then you'd find that all the other sectors are actually below 10%. Their contribution to the Kenyan GDP is below 10%. It's only manufacturing that is at 10.3%. Our export destinations, you can see as well, we're very diversified, whereby we export 21.7% of our exports go to the AU. Then you have about 21.7% going to America, and about 22.5% going to Asia. This as well helps the economy in the event that there's one market that is slowing. You'd find that the other markets sort of negate that effect from the slowing market. If I was to compare this, for instance, with Nigeria, when you look at Nigeria's exports, about 95% of their exports are actually controlled by oil. And that's the reason as to why last year, Nigeria actually planned to a recession because of the fact that oil prices collapsed, did decline drastically. So this helps us as well, whereby we don't over-rely in any one commodity. In 2017, we expect the economy, the Kenyan economy, to continually be driven by government spending, to be supported by the resilience of transport and trade, and also to be supported by the recovery of tourism. The key risks that we see in 2017, of course, my colleagues talked about them. Firstly is the unfavorable weather, and also the slowdown of private sector credit growth. And when we look at the contribution to GDP, especially for 2017, when you look at the four contributors to GDP, that's consumption, investment, government spending, and net exports, we expect consumption to be under downward pressure in 2017. This is because of, firstly, the fact that credit to the private sector slowed, and also the other effect. We know, as previously presented, businesses and investors adopt a wait-and-see approach whenever there's elections because of all the uncertainty that surrounds elections. So we expect investments really to be flat in 2017. The key factor that will propel the economy in 2017 will remain to be government expenditure. We've got all the projects that the government is undertaking as regards to infrastructure. We expect some more to be actually commissioned in 2017 and some of the projects to be completed in 2017. We expect this to really be the main driver as pertains to GDP growth in 2017. On net exports, because net exports is basically exports minus imports. Because we expect oil prices to trend upwards, we expect our net exports to be under downward pressure in 2017. All this sums up to our expectation about GDP growth in 2017. We expect the Kenyan economy to grow at a rate of between 5 to 5.6% in 2017. And like as had earlier highlighted, we expect this to be predominantly driven by government expenditure, the resilience of transport and trade, and also the recovery of tourism. The common mwananchi might not feel this because the common mwananchi relates to consumption. So when consumption slows, the common mwananchi may be asking hard questions, all this good growth that you're talking about, I can't feel it.